Welcome to TheoTrade. This is Don Kaufman. April 13th, 2022. There's 10 minutes to go to the cash close here on this Wednesday afternoon. S&Ps ripping up some 53 handles. Not even close, though, to the magnitude of the move inside of the Nasdaq, which is over 2% at this point in time. But what's on everybody's mind following statements from JP Morgan's very own Jamie Dimon, will poor earnings tank markets? Specifically, what Jamie Dimon had mentioned was seeing storm clouds on the horizon. The JP Morgan numbers that came out were very much less than lackluster. Ultimately, though, the stock is only down about 3%, but it's kind of what you would anticipate, if you will, out of an earnings announcement from a bank, whether it's a miss or not, neither here nor there. I mean, JP Morgan was expecting about a $5 move, got about a $5 move. The bigger question, though, that kind of looms, the inflationary environment. Is it so out of control that we're going to be hearing a similar story out of many of the earnings? In fact, tomorrow morning, we've got Citi, we've got Wells Fargo, we've got Morgan Stanley, Goldman Sachs. But again, let's push aside some of the banks. Again, the banks don't necessarily drive a tremendous amount of order flow other than, so the XLF. And the XLF, I mean, this thing's been resilient today. It's massively unchanged. A little bit of a bid, though, coming back as the day has kind of progressed. Again, what I think is cause for concern, specifically for me, though, is when you start seeing, again, some of the tech companies. I mean, the monsters of tech, which of course is this complex symbol we built between Microsoft, and Apple, and Amazon, Facebook, and Google, and of course you got to include Tesla and Nvidia in that as well. All of them are wildly bid, but it's tech, I think, that we have to have cause for concern. And on this front, it's not even so much about the inflationary pressures. And speaking of inflation, of course, I'd be remiss not to mention the CPI from yesterday at 8.5%. But even more appropriately today, I mean, today you had an 11.2% PPI, which is unheard of. What's unheard of? Well, there's never been a print that high. So when you're talking about inflation, it's completely out of control. It's the earnings in the tech revolving around the explosion of interest rates that's going to be cause for concern, because there might, at this point, be a pullback in some of the stock buybacks. Again, got to stress, poor earnings. Will they tank the marketplace? What's interesting is, again, you've had poor earnings come out of a handful of stocks today. And again, that's, it's up for debate. But again, JP Morgan, swing and a miss. The stock's only down again 3%. If you look at something like Bed Bath & Beyond, this one's actually worth a quick mention. Completely recovered from what was a bit of a hit in its earnings announcement. It's got a bid back under it. Again, the next few trading sessions are going to be quite interesting. Speaking of the next couple of trading sessions, let's get down to business with some of the activity that we've seen in the marketplace, today. I have to tell you, with the PPI print of 11.2%, with bad earnings this morning out of JP Morgan, obviously, again, more earnings coming tomorrow morning, I have to tell you, I think the marketplace dodged a huge bullet. And frankly, to me, it doesn't have anything to do with the earnings, right? Why did the S&P really dodge a huge bullet? And it comes all down to the SPX. Now, for those of you that do kind of pay attention to the SPX, if you pay attention to the expected moves, this is something we just mentioned incessantly, pretty much every single video. So I'll just round it. Expected move this week is supposed to be plus or minus about $75, right? All we've done throughout the course of the first three trading sessions of the week is come down to the edge of the expected move and skirt the lower edge of the expected move. We made the $75 move. We skirted the edge of the expected move. And when I say that, we kind of dodged a huge bullet. If you take a look on an intraday in the SPX, and again, to widen this out just a bit, I'm going to come over here to time frame. pop this to 5 minutes and knock it out to like the last 3 days. Again, everything that you've seen in terms of this week, in terms of trade, here's Monday, came down to the edge of the expected move, came down to the edge of the expected move, right? We opened on the edge of the expected move and we rallied out. Ironically, maybe there's a little sell side activity over here, but when I say that we dodged a huge bullet, we got real close, specifically this morning, to pushing off the lower edge of the expected move. And that's when the entire trading community will actually sell into selling. It's the dynamics of the marketplace. I mean, that's what hedging activity is. And everything there is about expected move, it's about hedging activity. People, this is what drives the marketplace. This is what drives order flow. And if you talk about order flow, I'd be remiss not to mention the fact that the SPX today is clear up to almost 2 million contracts. And if you looked, for instance, yesterday, the entire options marketplace traded about 37 million contracts. Almost 2 million of those contracts are coming from the SPX. And the irony is, if you look at a product like the Spiders, which is basically the same thing as the SPX, it's good for another 5 million. So you're already up to 7 million contracts, and you're looking at basically 2 products. But the notional value of the SPX is just phenomenally large, meaning it's it's a $4,400 product. So this is what drives order flow to the remainder of the marketplace. I mean, you use the S&Ps as the hedge. It's what drives order flow. So we dodged a huge bullet coming off of ultimately that lower edge of the expected move, which is right around 44.12 inside of the SPX. But we're just a hop, skip, and a jump north of that right now. And as you can see, just a few moments to go to the cash close here, and we're pulling back a little bit. All right, there's one other critical aspect that I would be remiss not to mention. It's something I actually brought up on the weekend video, and that's this: the correlation coefficient. We're rocking all of a sudden, and this is a critical change inside of the tone of the markets. Okay, lately we've seen a whole lot of 50-50 slop fest in the marketplace. And you got 50 stocks up, 50 stocks down, and it's been more or less, I'll come over here to the S&P futures and just actually bring up, this is going to be 30-day 1 hour. We've had a bit of a slop fest. The rally, well, it stopped, and that rally stopped pretty much I'm looking right here towards the end of March. We've been, slipping a little bit, but really, if you will, over the last, week of trade, it's been a slop fest in and around this, 43.80 on up to, we'll call it 44.50 and back again. But there's some huge differential now. What? We correlated today. So even though we're coming close to the cash close, we actually saw as many as 87 stocks at one point today in the S&P 100 trading on one side of the marketplace. People, that's the first time in a long time that we've seen that kind of advanced decline line. Now, to me, the advanced decline line is not about being bullish or bearish. It's about the ability to see correlation, which is indicative of the entire marketplace about to move. This is something that's going to be critical, just critical to watch into tomorrow. Speaking of tomorrow, tomorrow is expiration. That's it. It ends this week on Thursday. That is a reminder to each and every one of you. Markets are effectively closed on Good Friday. That is this Friday. Expiration is coming. All right, so April 14th, tomorrow is the expiration. We still have almost $37 of price action between today and tomorrow. Obviously, bank earnings are coming fast and hard tomorrow. As I said, there's Citi, there's Wells Fargo, there's Morgan Stanley, there's Goldman Sachs. Okay, be on the lookout again for high correlation. Be on the lookout for, again, specifically the level inside of the S&Ps is 44.12. We come back down to it, things can get wild. They can get wild in a hurry, right? The higher correlation coefficient is just indicative we're now ready to make a more substantial move in these markets. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.